Welcome, listener, to 11 Top Secret Fight for Your Money. How to stop getting ripped off and save a fortune. Introduction. Fight for your money. Picture yourself opening your wallet, only to feel a tug as invisible hands, those of corporations, banks, and scam artists, reach in to snatch your hard-earned dollars. This is the financial battlefield David Bach paints in the introduction to Fight for Your Money. How to stop getting ripped off and save a fortune. Writing in October 2008, amidst a global financial crisis that saw the U.S. stock market plummet 18% in a single week and real estate values drop 20% from their peak, Bach delivers a wake-up call. Every transaction, from paying a bill to buying a car, is a skirmish in a war for your money. In this 15-minute journey, we'll explore Bach's urgent message, his personal mission, and the promise that by fighting back, you can reclaim thousands of dollars and the life you deserve. Bach begins with a bold claim. This book could change how you handle money forever. Why? Because money touches every moment of your life. The lights in your home, the phone in your pocket, the insurance you rely on, all cost money, and Bach asserts you're paying too much. Companies, from credit card firms to hospitals, are engineered to extract as much from you as possible, using hidden fees, misleading offers, and sometimes outright fraud. He cites staggering figures. In 2007, credit card companies collected $23 billion in penalty fees, while banks pocketed $10 billion in overdraft charges. Meanwhile, 72 million Americans delayed medical care in 2008 due to unaffordable bills, as health insurers raked in $17 billion in profits. This isn't just business. It's a war, and consumers are losing because corporations are better armed. The stakes are high. Overpaying by 10 to 20% on daily expenses means working an extra 1 to 2 months a year, or 10 to 20 years before retirement, for companies that exploit you. Bach's own eyes were opened on the Oprah Winfrey Show in 2004, where he met real people drowning in financial desperation. Couples with $125,000 in credit card debt, others trapped by 900% interest payday loans, or scammed by nonprofit credit repair agencies. As a former Morgan Stanley vice president, Bach had never encountered such predatory practices, and these stories fueled his mission to empower everyone, rich or poor, to fight back. Bach, with 9 best-selling books and over 7 million copies in print, positions himself as your financial coach. His decade-long Finish Rich series taught millions to build wealth, but Fight for Your Money shifts focus to keeping it. He argues that financial ignorance is no longer affordable in an era of economic turmoil, where companies, struggling to stay profitable, devise sneakier ways to nickel and dollar you. Examples abound. A credit card skip a payment offer that still charges interest, a $13 monthly phone plan ballooning to $25 with hidden fees, or a $7,500 car loan insurance policy that's redundant for most buyers. These legal ripoffs add up, forcing you to work harder just to stay afloat. Yet Bach's tone is hopeful. You have the power to stop being a victim. By spending a few hours with his book, you can learn the secrets businesses don't want you to know, like how to negotiate a car price, dispute a bank fee, or spot a scam. Bach promises that small actions, like raising your credit score or skipping an extended warranty, can save hundreds or thousands annually. His Fight for Your Money rules: never trust verbal promises, know the total cost, resist pressure, equip you to win. He invites you to join a movement of empowered consumers, sharing success stories at finishrich.com, where readers have saved millions by applying his strategies. As Bach writes, you deserve to be in control of your money. In a world where corporations don't care about you personally, fighting for your money isn't just about dollars. It's about freedom, dignity, and the life you want. So, turn the page, grab your financial sword, and let's start winning this war together. There are 11 parts as following. Part 1, automobiles. Part 2, banking. Part 3, credit. Part 4, family matters. Part 5, health. Part 6, home. Part 7, retirement. Part 8, shopping. Part 9, taxes. Part 10, TV and phone. Part 11, travel. Let's deep dive and detail each part. Part 1, automobiles. Fighting for your money in the car industry. Imagine stepping onto a car dealership lot, the shiny new vehicles gleaming under the sun, a salesperson flashing a grin as wide as the highway. Your heart races. You're ready to drive away in your dream car. But in Fight for Your Money, How to Stop Getting Ripped Off and Save a Fortune, David Bach warns that this moment is the start of a financial battlefield. Every year, Americans buy roughly 14 million new cars, minivans, SUVs, and trucks, and in nearly every transaction, we're overcharged. From inflated financing to unnecessary add-ons, the auto industry is designed to separate you from your money. In this exploration, we'll dive into Bach's strategies for buying new and used cars, leasing, renting, and handling repairs, arming you with the tools to save thousands and drive away victorious. Buying a new car, outsmarting the dealer. Bach kicks off the automobiles section with a sobering truth. Buying a new car is rarely a smart investment. New cars lose 25 to 30% of their value in the first year, making a 1- or 2-year-old used car a better financial choice. But for those caught in the allure of that new car smell, Bach offers a battle plan to avoid getting fleeced. The National Automobile Dealers Association claims dealers lose $30 per new car sale. But don't be fooled. They recoup far more through financing and add-ons like extended warranties, which generate $5 billion annually, 75% of it pure profit. Take Tom Costable from Union Grove, Wisconsin. Tom and his wife found a car they loved and agreed on a fair price, but the dealer claimed their credit scores were very, very low, justifying a 25% interest rate loan. Suspicious, Tom checked his credit report online and discovered the dealer had lowballed their score by 120 points. By securing a bank loan instead, they saved thousands. Bach's advice: get your financing from a bank or credit union, not the dealer, where rates are often inflated. He also warns against zero-down/zero payments for a year offers, which accrue interest and depreciation, leaving you upside down, owing more than the car's worth. If your car is totaled, insurance won't cover the full loan, and you're stuck paying for a vehicle you no longer have. To get the best price, Bach urges you to focus on the dealer's actual cost, not the manufacturer's suggested retail price, MSRP, or even the invoice price. For a 2009 VW Jetta, the MSRP might be $19,090, the invoice $18,445, but the true cost, after holdbacks, 2 to 4% of MSRP, and factory incentives, could be $18,063. Use sites like edmunds.com, cars.com, or Kelley Blue Book to research these figures. When negotiating, ask to see the dealer's paperwork to verify costs, and walk away if they refuse. Bach also advises against trade-ins, which dealers undervalue to pad profits. Selling your old car privately can net you hundreds or thousands more. Dealers often push costly add-ons, like $800 rust proofing, which costs them $40, or $300 fabric protection, replaceable with a $10 can of Scotchgard. Extended warranties, averaging $1,000, are another ripoff, covering just $250 in repairs on average. Bach's mantra: just say no. Most new cars come with generous factory warranties, and betting on a catastrophic failure isn't worth it. If issues arise, like a lemon car, leverage state lemon laws. Bach shares his own story of buying a 1990 Volkswagen Passat that required frequent repairs. California's lemon law forced the dealer to address the issues, saving him a fortune. Buying a used car, value without the hit. For savvy consumers, used cars offer the best value, avoiding the steep first-year depreciation. Bach recommends low-mileage vehicles, 1 to 2 years old, still under warranty, but costing 70 cents on the dollar. Before buying, check the vehicle's history on Carfax to uncover accidents or title issues. Negotiate based on market data from Kelley Blue Book, and inspect the car with a trusted mechanic. Bach warns of scams, like odometer rollbacks or flood-damaged cars, urging you to verify the seller's credentials and avoid deals that sound too good to be true. Car leasing: proceed with caution. Leasing can seem appealing, but Bach cautions it's often a trap. Dealers obscure total costs with low monthly payments, hiding fees like acquisition costs or early termination penalties. Mileage limits, e.g., 12,000 miles per year, lead to hefty overage charges, and wear and tear fees can sting at lease end. Bach advises calculating the total lease cost up front, comparing it to buying and negotiating the capitalized cost, the car's price, as you would a purchase. Get all terms in writing and avoid signing until you understand every fee. Car rentals, saving on the road. Renting a car is another minefield. Bach suggests booking off-airport locations to save up to $300 a week, as airport surcharges inflate prices. Decline add-ons like GPS, prepaid fuel, or extra insurance. Your credit card or personal auto policy often covers rentals. Compare rates on kayak.com and inspect the car for damage before driving off to avoid bogus charges. One reader saved $150 on a week-long rental by skipping the airport and declining a $12 per day insurance upsell, following Bach's advice. Car repairs, avoiding overcharges. Car repairs are ripe for rip-offs, with shops inflating costs or recommending unnecessary services. Bach advises getting multiple quotes, using AAA-approved shops, and requesting written estimates. For major repairs, ask to see the old parts to verify work was done. He shares a story of a woman who saved $500 by questioning a $1,200 brake job, getting a second opinion that revealed only minor pads needed replacement. Always check warranties, as many repairs are covered under manufacturer or extended plans. Tools and action steps. Bach equips you with practical tools, like a sample letter to a dealership's general manager to resolve disputes, found in the book's Fight for Your Money toolkit. If negotiations fail, escalate to the owner or contact the Federal Trade Commission for fraud. For lemon cars, lemon laws can force buybacks or repairs. Bach's action steps include: research dealer costs and incentives online before shopping. Secure bank financing and check your credit score at annualcreditreport.com. Say no to add-ons and extended warranties. Sell your old car privately, not as a trade-in. Use no-haggle dealers like CarMax or services like AAA's car buying service to simplify purchases. The bigger picture. Bach's automobile strategies aren't just about saving money, they're about empowerment. By negotiating a $1,000 discount on a car or avoiding a $7,500 car loan insurance scam, you're not just keeping dollars in your pocket, you're reducing the years you need to work to retire. One reader, inspired by Bach's advice, saved $2,500 on a used car purchase and $600 on repairs, funding a family vacation. In a world where dealers and repair shops thrive on your ignorance, Bach's call to research, negotiate, and walk away from bad deals is a roadmap to financial freedom. As you step onto that dealership lot or into a repair shop, channel Bach's fighter mindset. Arm yourself with data, ask tough questions, and never sign without understanding the full cost. Your wallet and your dreams are worth the fight. Part 2: Banking, winning the fight for your money. Imagine opening your bank statement and spotting a $35 overdraft fee for a $4 coffee, or realizing your savings account earns a measly 0.5% interest while inflation eats away at your money. In Fight for Your Money, How to Stop Getting Ripped Off and Save a Fortune, David Bach declares that banks are not your friends. They're businesses designed to profit from your ignorance. Writing in 2008, during a financial crisis that exposed the greed of financial institutions, Bach reveals how banks collect billions annually through hidden fees and low-yield accounts. In this journey, we'll uncover his strategies to outsmart the banking system, save thousands, and make your money work harder, with real-life stories and practical tools to guide you. The banking battlefield. Bach starts with a jarring statistic. In 2007, banks raked in $10 billion in overdraft fees alone, often charging $35 for transactions as small as a $2 ATM withdrawal. These fees aren't accidents. They're a deliberate strategy. Banks like JP Morgan Chase and Wells Fargo process your largest transactions first, even if smaller ones came earlier, to maximize overdraft penalties. Meanwhile, the average checking account yields just 0.5% interest, far below the 3 to 4% offered by high-yield online savings accounts at the time. Bach's message is clear. If you're not paying attention, your bank is quietly draining your wealth. But it's not just fees. Banks push low-interest savings accounts and CDs that barely keep pace with inflation, ensuring your money grows slower than the cost of living. They also charge for free checking accounts with hidden maintenance fees or minimum balance requirements. Bach argues that in this financial war, knowledge is your weapon, and switching to better banking options can save you hundreds annually. Strategy 1. Dodge overdraft fees. Overdraft fees are a bank's cash cow, but Bach offers a simple fix. Set up overdraft protection. Link your checking account to a savings account or credit card so that if you overspend, funds are automatically transferred to cover the transaction, often for a $10 fee, or none at all, compared to a $35 overdraft charge. One reader, Sarah from Chicago, saved $420 a year by enrolling in overdraft protection after racking up multiple fees for small purchases like gas and groceries. If you do get hit with a fee, don't just pay it, fight it. Bach suggests calling your bank and politely requesting a waiver, using a script like, "I've been a loyal customer for years, and I'd appreciate if you could waive this overdraft fee as a one-time courtesy." He claims 80% of such requests succeed if you're firm but courteous. A single mother named Lisa used this approach and had two $35 fees reversed, putting $70 back in her pocket for her kids' school supplies. Strategy 2. Ditch costly checking accounts. Free checking is rarely free. Many accounts require a minimum balance, like $1,500, or charge $10 to $15 monthly maintenance fees if you fall below it. Bach advises switching to truly free checking accounts, often offered by online banks or credit unions, which have no minimums or fees. One reader, Mark, threatened to close his account at a major bank after spotting a $12 monthly fee. The bank waived it, and Mark switched to a no-fee online account, saving $144 a year. Bach also warns against packaged accounts that bundle services like traveler's checks or safe deposit boxes you don't need. Review your statements for these add-ons and negotiate to remove them. If your bank won't budge, shop around using sites like bankrate.com to find better options. Strategy 3. Maximize your savings. Savings accounts at traditional banks are a losing game, offering 0.5% interest in 2008, while online banks like ING Direct, now Capital One 360, paid 3 to 4%. Bach urges moving your money to high-yield online accounts, which are FDIC insured and often have no fees or minimums. For example, $10,000 in a 0.5% account earns $50 a year, but at 3.5%, it earns $350, a $300 difference. A couple, John and Emily, followed this advice and shifted $20,000 to an online savings account, earning an extra $600 annually to fund their emergency savings. Certificates of deposit, CDs, can offer higher rates, but Bach cautions against long-term CDs that lock up your money at fixed rates, especially if interest rates rise. Instead, opt for short-term CDs or bump-up CDs that let you adjust rates if they increase. Always compare rates on bankrate.com and avoid penalties by understanding withdrawal terms. Strategy 4. Protect your money. Banking scams and identity theft are rampant, costing consumers billions yearly. Bach advises checking your accounts regularly online, not just via monthly statements, to spot unauthorized transactions fast. Use strong passwords, avoid sharing personal details via email, and monitor your credit report at annualcreditreport.com to catch fraud early. One reader, Tom, discovered a $500 fraudulent withdrawal and recovered it by reporting it within 24 hours, thanks to Bach's advice. For added security, Bach recommends using credit cards over debit cards for purchases, as they offer stronger fraud protection and let you dispute charges without losing cash from your account. If you suspect a scam, report it to the Federal Trade Commission or your state's Consumer Protection Agency to protect others. Tools and action steps. Bach's Fight for Your Money toolkit includes sample scripts, like one to negotiate fee waivers. Dear Bank Manager, I noticed a $15 maintenance fee on my account. As a loyal customer, I request this be waived, or I may switch banks. He also suggests escalating complaints to bank executives or the Consumer Financial Protection Bureau if unresolved. Key action steps include: enroll in overdraft protection linked to savings or a credit card. Switch to a no-fee checking account, preferably online or at a credit union. Move savings to a high-yield online account, targeting 3 to 4% interest. Monitor accounts weekly and use credit cards for purchases to limit fraud risk. Compare rates on bankrate.com before opening accounts or CDs. The bigger picture. Bach's banking strategies are about more than saving a few bucks. They're about reclaiming control. By dodging a $420 overdraft fee or earning $600 more in interest, you're not just padding your wallet. You're buying time, freedom, and peace of mind. Sarah, the Chicago reader, used her savings to start an emergency fund, reducing her financial stress. In a world where banks bet on your apathy, Bach's call to research, negotiate, and switch is a rebellion against exploitation. As you log into your bank account or review your next statement, channel Bach's fighter mindset. Question every fee, demand better rates, and move your money where it's valued. Your financial future deserves nothing less. Part 3: Credit. Mastering your financial power. Picture yourself swiping a credit card for a $50 dinner, only to find a $39 late fee tacked onto your next statement, pushing your interest rate to a punishing 29%. In Fight for Your Money: How to Stop Getting Ripped Off and Save a Fortune, David Bach paints the credit industry as a financial jungle where credit card companies, lenders, and scammers stalk consumers, pocketing billions through penalties and predatory practices. Writing in 2008, as the global financial crisis exposed the perils of unchecked debt, Bach equips you with a machete to cut through this jungle. In this exploration, we'll uncover his strategies for mastering credit cards, boosting your credit score, and dodging scams, with real-life stories and tools to save you thousands and secure your financial future. The Credit Trap. Bach begins with a staggering figure. In 2007, credit card companies collected $23 billion in penalty fees, from late payments to over-limit charges, often hiking interest rates to 29% or higher for a single misstep. These companies thrive on your debt, encouraging minimum payments that stretch balances for decades. A $10,000 balance at 18% interest, paid at the minimum, takes 30 years to clear, costing $22,000 in interest. Meanwhile, your credit score, the three-digit number dictating your borrowing power, can make or break your financial life. A 50-point drop might add $95,040 to a 30-year mortgage or $1,200 to yearly car insurance premiums. Bach's mission: turn you from a prey into a predator, using credit wisely to build wealth, not lose it. Strategy 1: Mastering credit cards. Credit cards are a double-edged sword, convenient but deadly if mishandled. Bach's golden rule is to pay your balance in full each month to avoid interest, which can balloon to hundreds monthly on a $5,000 balance at 18%. If you carry a balance, negotiate a lower rate. Bach provides a sample script. I've been a loyal customer, but I'm considering a card with a lower rate. Can you reduce my 18% to 9%? One reader, Maria from Texas, used this tactic and slashed her rate from 18% to 9% on a $10,000 balance, saving $900 a year in interest. Bach warns against store credit cards, like those from Macy's or Best Buy, which lure you with discounts but charge up to 25% interest, 10 points higher than typical bank cards. Similarly, medical credit cards for dental or elective procedures trap patients in high-interest debt. He advises using a single, low-rate card for all purchases and paying it off monthly. If you're drowning in debt, transfer balances to a 0% introductory rate card, but read the fine print for transfer fees, often 3%, and ensure you pay it off before the promotional period ends. For protection, use credit cards over debit cards for purchases. If a merchant overcharges or you encounter fraud, you can dispute the charge without losing cash from your checking account. Bach shares the story of James, who disputed a $200 unauthorized charge on his Visa and recovered it within days, thanks to federal laws limiting cardholder liability to $50. Strategy 2: Boosting your credit score. Your credit score, ranging from 300 to 850, is your financial report card, affecting everything from mortgage rates to job applications. Bach emphasizes that raising it by just 50 points can save tens of thousands over a lifetime. For example, improving from 650 to 700 might cut a 30-year, $200,000 mortgage rate from 6.5% to 5.5%, saving $95,040 in interest. He outlines key steps to boost your score. Check your credit report. Access your free report from annualcreditreport.com and dispute errors, which affect 1 in 4 reports. A reader, David, corrected a $200 error misreported as a default, boosting his score by 40 points and saving $1,500 in mortgage interest. Pay on time. Late payments can drop your score by 100 points. Set up auto-pay to avoid misses. Keep balances low. Use less than 30% of your credit limit. On a $10,000 limit card, keep balances below $3,000 to signal responsibility. Avoid new accounts. Opening multiple cards in a short period lowers your score by signaling risk. Maintain old accounts. Long credit history boosts your score, so keep older cards active with small, paid-off charges. Bach also advises against closing and used cards, as it reduces your available credit and raises your utilization ratio, hurting your score. If you're recovering from debt, work with reputable credit counselors through the National Foundation for Credit Counseling, not credit repair scams promising quick fixes. Strategy 3. Avoiding credit scams. The credit industry is rife with predators, from free credit report websites that enroll you in costly subscriptions to debt settlement firms charging thousands for services you can do yourself. Bach warns of medical credit cards pitched by doctors for procedures, which often carry 20% plus interest rates and deferred interest traps, where missing one payment triggers retroactive charges. He cites Anna, a patient who nearly signed up for a $5,000 dental card but opted for a low-rate bank loan, saving $1,200 in interest. Phishing scams, posing as banks via email or phone, trick you into sharing account details. Bach advises never sharing personal information unless you initiate contact with a verified institution. If you suspect fraud, report it to the Federal Trade Commission or your state's Consumer Protection Agency. One reader, Tom, avoided a $1,000 loss by recognizing a phishing email claiming his card was compromised and verifying directly with his bank. Tools and action steps. Bach's Fight for Your Money toolkit includes scripts, like one to dispute a fee. Dear card issuer, I noticed a $39 late fee on my account. As a valued customer, I request a one-time waiver. He claims 80% of such requests succeed if you're polite but persistent. Key action steps include: pay credit card balances in full monthly or transfer to a 0% introductory rate card. Negotiate lower interest rates using Bach's call script. Check your credit report annually at annualcreditreport.com and dispute errors. Keep credit utilization below 30% and avoid opening or closing accounts unnecessarily. Use credit cards for purchases to leverage fraud protection and report scams to the FTC. The bigger picture. Bach's credit strategies are about empowerment, not just savings. By cutting a $900 interest bill or raising your credit score to save $95,040 on a mortgage, you're reclaiming control over your financial destiny. Maria, the Texas reader, used her savings to start a college fund for her daughter, while David's mortgage savings funded a dream vacation. In a world where credit companies bet on your mistakes, Bach's call to negotiate, monitor, and protect is a rebellion against exploitation. As you review your next credit card statement or check your credit score, channel Bach's fighter mindset. Question every fee, dispute every error, and wield your card as a tool, not a trap. Your financial freedom is worth the fight. Part 4: Family Matters. Securing your loved one's financial future. Imagine sitting at your kitchen table, staring at a college tuition bill that's doubled in a decade, or worrying whether your family would survive financially if you were gone. In Fight for Your Money: How to Stop Getting Ripped Off and Save a Fortune, David Bach frames these family-related financial decisions as battles in a larger war for your money. Writing in 2008, as the financial crisis shook American households, Bach warns that colleges, insurance companies, and investment firms often profit by exploiting your hopes for your family's future. In this journey, we'll explore his strategies for saving for college, securing life insurance, and planning for retirement, armed with real-life stories and practical tools to save thousands and protect those you love most. The Family Financial Frontline. Bach begins with a stark reality. Family decisions carry the highest stakes, both emotionally and financially. College tuition costs rose 6 to 9% annually in the 2000s, outpacing inflation, with private universities averaging $40,000 a year by 2008. Life insurance, meant to protect your family, is often oversold, with agents pushing costly policies that yield high commissions. Retirement planning, meanwhile, is riddled with hidden fees in 401(k), and IRAs, eroding your nest egg. Bach's mission is to equip you with knowledge to navigate these challenges, ensuring your money serves your family's dreams, not corporate profits. Strategy 1. Saving for college. College costs are a financial tsunami, with tuition, room, and board at public four-year schools averaging $17,000 annually in 2008 and private schools far higher. Bach predicts that by 2025, a four-year degree could cost $200,000. Yet, he offers hope through smart planning. His top recommendation is the 529 College Savings Plan, a tax-advantaged account where earnings grow tax-free if used for qualified education expenses. Bach advises starting early. A $100 monthly contribution from birth at 8% return could grow to $50,000 by age 18, covering half a public university's cost. Alternatively, prepaid tuition plans let you lock in today's rates, shielding you from tuition inflation. Bach shares the story of the Thompsons, who invested $10,000 in a 529 plan for their newborn, saving $30,000 in future tuition costs by 2025. He also suggests applying for scholarships via fastweb.com, which lists 1.5 million awards, and negotiating financial aid packages with colleges. One reader, Lisa, increased her daughter's aid by $5,000 annually after submitting a competitor school's offer, saving $20,000 over 4 years. Bach warns against pitfalls like using home equity loans for tuition, which risks your home if you can't repay, or relying on student loans without exploring grants. He also cautions against college savings scams promising high returns, urging you to stick with state-sponsored 529 plans verified at savingforcollege.com. Strategy 2. Securing life insurance. Life insurance is your family's safety net, but Bach reveals how agents often push whole life or universal life policies with high premiums and commissions, costing 10 times more than term life insurance. A 35-year-old man might pay $2,400 annually for a $500,000 whole life policy, but only $240 for a 20-year term policy with the same coverage. Bach's advice: buy term life for 10 to 20 years, covering your working years, and invest the savings elsewhere, like a 401k. He shares the story of Robert, a father of two, who switched from a $2,400 whole life policy to a $1,200 term policy, saving $1,200 annually. Robert redirected the savings to a 529 plan, building a college fund for his kids. Bach recommends comparing quotes at insure.com or termforsale.com, ensuring coverage equals 8 to 10 times your annual income, and naming your spouse or a trust as beneficiary to avoid estate taxes. He warns against mortgage life insurance, which benefits lenders, not your family, and credit life policies tied to car loans, which are overpriced. Scams abound, like fake insurers collecting premiums without coverage. Bach advises verifying agents through your state's insurance department and avoiding policies requiring upfront payments without clear terms. Strategy 3. Planning for retirement. Retirement planning is critical for financial independence, but Bach exposes how 401k and IRA fees, often 1 to 2% annually, can erode half your savings over 30 years. A $100,000 account with 2% fees grows to $324,000 in 30 years at 8% return, but with 1% fees, it reaches $432,000, a $108,000 difference. Bach urges reviewing your plan's fee disclosure, mandated since 2008, and switching to low-cost index funds, like those from Vanguard, with fees as low as 0.1%. He shares the story of Susan, a teacher who rolled over a $50,000 401k from a high-fee plan, 2%, to a low-fee IRA, 0.5%, saving $1,500 annually. Susan used the savings to max out her Roth IRA, boosting her retirement nest egg. Bach also recommends contributing enough to your 401k to get the full employer match, free money, and automating contributions to IRAs for tax advantages. He warns against guaranteed income annuities with high commissions and surrender fees, which lock up your money for decades. Retirement scams, like fake investment seminars promising safe returns, prey on seniors. Bach advises verifying advisors at FINRA's broker check and avoiding investments not covered by SIPC insurance. Tools and action steps. Bach's Fight for Your Money toolkit includes scripts, like one to negotiate college aid. Dear Financial Aid Office, my child received a $10,000 aid package from competitor college. Can you match or improve your offer? Key action steps include: start a $529 plan or prepaid tuition plan, contributing monthly via automatic transfers. Apply for scholarships at fastweb.com and negotiate aid with colleges. Buy term life insurance, 8 to 10 times income, and compare quotes at insure.com. Review 401k/IRA fees, switch to low-cost index funds, and max out employer matches. Verify advisors and insurers at FINRA or state regulators, reporting scams to the FTC. The bigger picture. Bach's family strategies are about more than money. They're about legacy. By saving $20,000 on college or $108,000 in retirement fees, you're not just securing your family's future. You're freeing yourself to live your dreams, whether that's retiring early or funding a grandchild's education. Lisa's college savings gave her daughter a debt-free start, while Susan's retirement planning ensured a comfortable future. In a world where institutions profit from your family's aspirations, Bach's call to research, negotiate, and protect is a stand for love and security. As you plan for your child's college, your family's safety, or your golden years, channel Bach's fighter mindset. Question every fee, compare every option, and invest in your family's future with confidence. Your loved ones deserve nothing less. Part 5: Health, fighting for your financial wellness. Imagine receiving a hospital bill for $10,000, only to discover hidden charges for services you never received, or realizing your health insurance premium has doubled while covering less. In Fight for Your Money, How to Stop Getting Ripped Off and Save a Fortune, David Bach casts the healthcare system as a financial minefield where insurers, hospitals, and scammers profit by exploiting your need for care. Writing in 2008, as 72 million Americans delayed medical treatment due to soaring costs, Bach reveals how the industry's $17 billion in profits often comes at your expense. In this exploration, we'll uncover his strategies for choosing health insurance, managing medical bills, and dodging health scams, with real-life stories and tools to save thousands and protect your financial health. The healthcare hustle. Bach starts with a grim statistic. In 2007, health insurers earned $17 billion in profits, while 47 million Americans lacked coverage, and those with insurance faced rising premiums, up 87% from 2000 to 2006, 5 times faster than wages. By 2025, Bach's projections suggest annual family premiums could hit $25,000. Hospitals overcharge with facility fees or inflated rates for basics like $10 aspirin, while medical billing errors affect 80% of invoices, costing patients billions. Scams, from fake health products to fraudulent insurers, add insult to injury. Bach's mission is to arm you with knowledge to navigate this system, ensuring your money supports your health, not corporate greed. Strategy 1. Choosing the right health insurance. Health insurance is your shield, but picking the wrong plan can bankrupt you. Bach advises comparing plans based on total cost, premiums, deductibles, copays, and out-of-pocket maximums, not just monthly payments. For a family, a high-deductible plan with a $5,000 deductible might save $2,000 in premiums annually, but cost more if you need frequent care. He recommends health savings accounts, HSAs, paired with high-deductible plans, allowing pre-tax contributions, up to $3,300 for individuals in 2008, to cover medical expenses, with unused funds growing tax-free. Bach shares the story of the Wilsons, a family who switched to an HSA plan, saving $1,800 in premiums and building a $5,000 medical fund over 3 years. For those without employer coverage, he suggests shopping at ehealthinsurance.com for individual plans and verifying insurer ratings at amidst.com. He warns against discount health plans, posing as insurance, which offer limited benefits and leave you liable for major costs. One reader, Sarah, lost $2,000 to a fake insurer but recovered $1,500 after reporting it to her state's insurance commissioner. Strategy 2. Managing medical bills. Medical bills are a labyrinth of errors and overcharges. Bach cites a 2008 study showing 80% of hospital bills contain mistakes, averaging $1,300 per patient. His advice? Scrutinize every bill, requesting an itemized statement to spot charges like $100 for a box of tissues or $500 for a routine blood test. If errors appear, dispute them with the hospital's billing department using Bach's sample letter. Dear Billing Office, I noticed a $200 charge for service. Please provide documentation or remove it. He claims 50% of disputes succeed if you're persistent. For large bills, negotiate a discount or payment plan. Hospitals often accept 20 to 50% less than billed if paid up front, as they recover only 30 cents on the dollar from unpaid debts. Bach tells of Maria, a single mother who faced a $15,000 surgery bill. By negotiating, she reduced it to $9,000 and set up a $200 monthly plan, saving $6,000. If uninsured, Bach suggests applying for charity care. Many hospitals offer free or discounted services for low-income patients. He also recommends hiring a medical billing advocate, found at billadvocates.com, to fight complex disputes, often saving thousands for a small fee. Strategy 3. Avoiding health scams. Health scams prey on desperation, costing Americans $40 billion annually in 2008. Bach warns of miracle cure products like weight loss pills or cancer treatments, sold online or via telemarketing, often with fake testimonials. He also flags free trial offers that enroll you in recurring charges, like a $99 per month supplement subscription. One reader, Tom, lost $300 to a fake vitamin scam, but recovered $200 after complaining to the Better Business Bureau. Fake health insurance plans, marketed as affordable alternatives, are another trap, collecting premiums without covering claims. Bach advises verifying providers with your state's insurance department and avoiding plans requiring upfront fees without clear terms. For legitimate care, he suggests using in-network providers to avoid balance billing, where out-of-network doctors charge you the difference between their fee and insurance coverage, sometimes thousands. Tools and action steps. Bach's Fight for Your Money toolkit includes scripts, like one to dispute a bill. Dear Hospital, your bill includes a $300 charge for service not received. Please correct this or provide proof. Key action steps include: compare health plans on ehealthinsurance.com, prioritizing total costs and HSA eligibility. Request itemized medical bills and dispute errors, negotiating discounts or payment plans. Verify insurers at amidst.com and report scams to the FTC or state insurance commissioner. Use in-network providers and apply for charity care if uninsured. Avoid miracle cure products and free trial health offers, checking reviews at bbb.org. The bigger picture. Bach's health strategies are about more than saving money. They're about peace of mind. By saving $6,000 on a hospital bill or $1,800 on insurance, you're not just protecting your wallet, you're ensuring your family's health without financial ruin. Maria's negotiation freed funds for her son's education, while the Wilsons' HSA built a safety net for emergencies. In a healthcare system that bets on your confusion, Bach's call to scrutinize, negotiate, and verify is a stand for your well-being. As you open your next medical bill or renew your insurance, channel Bach's fighter mindset. Question every charge, demand transparency, and choose plans that serve you, not profiteers. Your health and your family's future are worth the fight. Part 6. Home. Building wealth without getting ripped off. Imagine signing the papers for your dream home, only to discover hidden mortgage fees that inflate your payments by thousands, or hiring a contractor whose bargain remodel doubles in cost and leaves your house in chaos. In Fight for Your Money, How to Stop Getting Ripped Off and Save a Fortune, David Bach portrays the homeownership journey as a financial battlefield where lenders, real estate agents, and contractors profit by exploiting your trust. Writing in 2008, as the housing market crashed and foreclosures soared, Bach warns that buying, financing, or improving a home can drain your wealth if you're not vigilant. In this exploration, we'll uncover his strategies for buying a home, securing a mortgage, and managing building or remodeling, with real-life stories and tools to save tens of thousands and build lasting wealth. The Homeownership Hustle. Bach begins with a sobering truth. Your home is likely your biggest investment, yet the process is rigged to overcharge you. In 2008, Americans spent $1.2 trillion on home purchases, $300 billion on repairs and remodeling, and $50 billion on custom homes. Yet many paid thousands more than necessary due to predatory loans, inflated appraisals, or shoddy contractors. Mortgage lenders pushed exotic loans, like adjustable rate or interest-only mortgages, that fueled the 2008 crisis, leaving millions underwater. Contractors often doubled project costs through vague estimates or unnecessary upgrades. Bach's mission is to arm you with knowledge to navigate this maze, ensuring your home builds wealth, not debt. Strategy 1. Buying a home. Buying a home starts with preparation, not house hunting. Bach advises shopping for a mortgage first, using calculators at vertex42.com to estimate total ownership costs, principal, interest, taxes, insurance, and maintenance, which can add 50% to the sticker price. In 2025, with median home prices around $400,000, up 20% from 2008, a $320,000 mortgage at 6% over 30 years costs $692,000 with interest and taxes. He recommends fixed-rate 15 or 30-year loans, avoiding adjustable-rate mortgages, ARMs, that spike after low teaser rates. Pre-approval from a bank or credit union, not a mortgage broker, locks in your rate and strengthens your offer. Bach warns of real estate traps, like inflated appraisals that justify overpriced homes or pressure to waive inspections. He suggests hiring an independent appraiser and inspector, costing $300 to $500, but saving thousands by uncovering issues like faulty wiring. At closing, compare the good faith estimate with the HUD-1 settlement statement to catch surprises like hidden fees. June and Frank, a couple Bach coached, rejected a refinancing deal after spotting a predatory default clause on the HUD-1, saving $300 in fees and avoiding a risky loan. Strategy 2. Securing a mortgage. Mortgages are where lenders make billions, often through yield spread premiums, kickbacks for steering you into higher-rate loans. Bach advises getting quotes from multiple lenders via lendingtree.com and negotiating to eliminate junk fees, like $500 document preparation charges. He shares the story of the Martins, who saved $4,000 in closing costs by questioning a $1,200 processing fee and securing a 5.5% fixed-rate mortgage instead of a 6.5% ARM, cutting their 30-year interest by $60,000. Bach cautions against exotic loans, like option ARMs, where unpaid interest balloons your balance, or no-doc, loans requiring no income proof but charging higher rates. If you're refinancing, ensure the new rate is at least 1% lower and you'll stay in the home long enough to recoup closing costs, typically $3,000. Always read the fine print and walk away from deals with prepayment penalties or balloon payments. Strategy 3. Building and remodeling. Home building and remodeling are financial black holes, with projects often costing twice the estimate and taking twice as long. In 2008, Americans spent $300 billion on repairs and $50 billion on custom homes, yet 20% of projects face disputes over costs or quality. Bach advises hiring licensed, bonded contractors with references, verified via Angie's List, now Angie. Create a detailed budget, specifying materials, e.g., Carrara marble versus stone, and use fixed-price contracts, not cost-plus, ones that let costs spiral. Require lien releases to prevent subcontractors from placing liens on your home if the contractor doesn't pay them. Bach tells of a reader, Emily, who saved $10,000 on a kitchen remodel by rejecting a $5,000 design fee and hiring an inspector to verify work quality, avoiding $5,000 in unneeded plumbing upgrades. He also warns of scams, like contractors claiming urgent repairs, e.g., a failing roof, without proof. One reader avoided a $7,000 scam by getting a second opinion, confirming their roof was sound. Tools and action steps. Bach's Fight for Your Money toolkit includes scripts, like one to dispute a mortgage fee. Dear lender, I noticed a $500 processing fee on my HUD-1. Please justify or remove it. Key action steps include: calculate total homeownership costs at vertex42.com and get pre-approved for a fixed-rate mortgage. Hire independent appraisers and inspectors, comparing good faith estimates with HUD-1 statements. Negotiate mortgage fees via lendingtree.com, avoiding ARMs or no-doc loans. Hire licensed contractors with fixed-price contracts, using Angie's List for references. Request lien releases and second opinions for repairs, reporting scams to the BBB. The bigger picture. Bach's home strategies are about more than savings. They're about security and dreams. By saving $60,000 on a mortgage or $10,000 on a remodel, you're not just keeping money. You're funding a child's college, a comfortable retirement, or a family legacy. The Martins' mortgage savings fueled a dream vacation, while Emily's remodel savings paid off credit card debt. In a housing market that bets on your naivety, Bach's call to research, negotiate, and verify is a stand for your family's future. As you tour your next home or plan a renovation, channel Bach's fighter mindset. Question every fee, demand transparency, and build your wealth with confidence. Your home, your castle, is worth the fight. Part 7: Retirement. Securing your future without losing your savings. Picture this. You're 65, sipping coffee on a sunlit porch, free to travel, volunteer, or spoil your grandkids, with a nest egg that lets you live comfortably. Now imagine the opposite. Scraping by on a $1,500 monthly Social Security check, unable to afford healthcare or hobbies because you didn't save enough or got fleeced by hidden 401k fees or a bad IRA investment. In Fight for Your Money, David Bach paints retirement planning as a high-stakes game where banks, brokers, and your own inaction can rob you of millions. Writing in 2008, amid a financial crisis that wiped out trillions in retirement savings, Bach urges you to take control of your 401k and IRA to build wealth, not lose it. In this journey, we'll explore his strategies for maximizing retirement accounts, dodging costly traps, and securing your golden years, with stories of triumph and caution to guide you. The Retirement Ripoff. Bach starts with a wake-up call. Your retirement is your responsibility, not your employer's or the government's. In 2008, 55 million Americans had $4.3 trillion in 401k plans, but financial firms siphon off over $150 billion annually, 3% of assets, in hidden fees, meaning your savings had to earn 3% just to break even. Social Security, averaging $13,033 a year in 2008, about $18,000 in 2025, adjusted for inflation, won't fund a decent lifestyle. Traditional pensions are vanishing, leaving 401k and IRAs as your best shot at retiring rich. Yet, Bach warns, mismanaging these accounts, through low contributions, bad investments, or early withdrawals, can cost you hundreds of thousands. His solution? Pay yourself first, invest wisely, and fight for every dollar. Strategy 1. Maxing out your 401k. Bach calls the 401k a no-brainer for building wealth. Thanks to tax-deferred growth and employer matching, free money most people don't fully claim. In 2025, you can contribute up to $23,000 annually, or $30,500 if over 50, often with employers matching 50% or 100% of your contributions up to a limit. For example, contributing $1,000 to a 401k with a 50% match gives you $1,500 to invest, tax-free, growing to $1,650 in a year at 10%, versus $770 after taxes in a regular account. Bach's clients at Morgan Stanley became millionaires by maxing out early, like Sarah, who started at 25, saved 15% of her $50,000 salary, and retired at 60 with $1.8 million, thanks to compounding and matching. To maximize your 401k, Bach says to aim for the IRS limit, not the 4% most contribute, which leaves them poor. If $23,000 feels impossible, start with 1 hour a day of your income, 12.5% for a 40-hour week. For a $60,000 salary, that's $7,500 a year, or $625 monthly, growing to $1.2 million by 65 at 8%. If even that's tough, begin at 4% and increase 1% monthly, hitting 12% in a year. Check your plan's vesting schedule. Some delay full ownership of employer contributions for years and review statements to ensure contributions are credited. Sarah avoided a $10,000 loss by catching a payroll error, notifying her employer in writing, and securing her funds. Strategy 2. Choosing the right investments. Investing your 401k or IRA wisely is critical, but Bach warns that employers and plan providers offer little guidance, leaving many to park funds in low-yield money market accounts. In 2025, with markets volatile, diversification is key. Bach recommends target date funds, which adjust risk based on your retirement year, aggressive early, conservative later. By 2008, these funds held $204 billion, and their popularity has soared, with Vanguard and T. Rowe Price earning high marks for low-cost and aggressive options, respectively. For IRAs, you have more freedom, but avoid tax-deferred investments like municipal bonds, which lose value in a tax-sheltered account. Bach shares the story of Tom, who at 40 moved his 401k from a money market fund to a target date fund, boosting his annual return from 2% to 7%. By 65, his $100,000 grew to $450,000 versus $150,000 in the safe fund. However, he cautions against over-investing in your company's stock, citing Enron and Lehman Brothers employees who lost jobs and 60% of their 401ks when their firms collapsed. Limit company stock to 5 to 10% of your portfolio to avoid this double whammy. Strategy 3. Avoiding costly mistakes. Bach identifies two devastating 401k mistakes: borrowing and cashing out. Borrowing up to $50,000 is tempting, but it shrinks your nest egg. A 35-year-old with $20,000 who borrows twice could lose $38,000 by 65, per Vanguard. Worse, unpaid loans become withdrawals, triggering taxes and a 10% penalty if under 59 and a half. Cashing out is even costlier. In 2008, nearly half of job changers cashed out their 401ks, especially 20-somethings. A 25-year-old cashing out $10,000 pays $4,500 in taxes and penalties, netting $5,500, but loses $217,000 by 65 at 8%. Instead, roll over funds to a new 401k or IRA within 60 days. Lisa, a reader, rolled over $15,000 to an IRA, growing it to $200,000 by 60, while her friend cashed out $12,000, netting $7,000 and regretting it. For IRAs, Bach stresses starting early and choosing wisely. Only 10% of eligible Americans contributed in 2008, missing out on tax-deferred growth. In 2025, you can save $7,000 annually, $8,000 if over 50. A 25-year-old contributing $7,000 yearly at 8% retires with $2.1 million. Starting at 55 yields $108,000. Young savers should opt for Roth IRAs for tax-free withdrawals, while those over 50 benefit from traditional IRA deductions. Avoid penalties by using exceptions, like $10,000 for first-time home buying, as Maria did to buy her condo without a 10% hit. Strategy 4. Fighting fees and scams. Hidden fees are a silent killer, costing 3 to 5% annually. A 1% excess fee could shrink your nest egg by 20%, or $80,000 over a career, forcing you to work years longer. Bach cites lawsuits against Walmart and Boeing, where employees won millions for being offered high-fee retail funds. Demand fee transparency from your plan administrator. If fees exceed 3%, complain to HR. For IRAs, watch for brokers pushing unsuitable investments like real estate, which are hard to value at 70 and a half when withdrawals are mandatory. Report issues to the Employee Benefits Security Administration, 800-444-3272, or state regulators. Action steps to retire rich. Bach's Fight for Your Money Toolkit offers practical steps. Enroll in your 401k today, contributing at least 12.5% of income, aiming for $23,000, 2025 limit. Choose target date funds for diversification. Limit company stock to 5 to 10%. Roll over 401ks to new plans or IRAs. Never cash out. Open an IRA, favoring Roth if under 35, traditional if over 50, and max out at $7,000. Check statements quarterly, dispute fees over 3%, and report errors in writing. Your retirement, your fight. Bach's message is clear. Your retirement isn't guaranteed. It's earned through smart choices and vigilance. Sarah's $1.8 million nest egg, Tom's $450,000 fund, and Lisa's $200,000 IRA show what's possible. But Enron's workers and Lisa's friend remind us of the stakes. In 2025, with markets unpredictable and Social Security stretched, your 401k and IRA are your lifeline. Fight for every dollar, and you'll retire not just secure, but rich, ready to live your dreams on your terms. Part 8: Shopping Smart. How to keep retailers from stealing your money. It's May 19th, 2025, and you're strolling through a bustling mall in Bangkok, your phone buzzing with flash sale alerts. A pair of sneakers catches your eye, $150, down from $200. Your heart races. It's a steal, right? But David Bach, in Fight for Your Money, would stop you cold. That deal might be a retailer's trick, designed to empty your wallet while you think you're saving. Writing in 2008, during a recession that exposed consumer vulnerabilities, Bach argued that shopping is a battlefield where retailers, credit card companies, and your own impulses conspire to rip you off. In this 30-minute narrative, we'll dive into his strategies for outsmarting retail traps, saving thousands, and spending with purpose, illustrated with stories of savvy shoppers and cautionary tales. The shopping trap. Bach begins with a stark truth. Americans overspend by billions annually because retailers are masters of manipulation. In 2008, consumer spending hit $10 trillion, much of it on impulse buys, clothes, gadgets, dining out, that left families broke. Fast forward to 2025, and Statista reports U.S. retail sales at $8.1 trillion, with e-commerce, 25% of sales, fueling impulsive clicks. Bach's core warning? Retailers use psychology, fake discounts, loyalty programs, easy credit, to make you spend more than you plan. Without a strategy, you're not shopping, you're being fleeced. His mission is to arm you with tools to buy what you need, dodge traps, and keep your money for goals like retirement or debt freedom. Strategy 1. Plan before you shop. Bach's first rule is simple: never shop without a plan. Impulse buys account for 60% of purchases, per 2008 studies, and apps like Shopee or Lazada in 2025 make it worse with buy now buttons. Bach advocates the latte factor, small daily savings that add up. Spending $5 daily on coffee or snacks costs $1,825 a year, enough for a vacation or IRA contribution. To fight this, make a shopping list and set a budget. For big purchases, use the 48-hour rule. Wait 2 days to ensure you need it. Take Anna, a 30-year-old teacher in Chiang Mai. In 2023, she spent $2,000 yearly on clothes and gadgets, often on sales. After reading Bach, she started budgeting $100 monthly for discretionary purchases, listing needs, work shoes, phone upgrade, and waiting 48 hours for wants. In 2024, she saved $1,200, funding a trip to Japan. Contrast this with Mike, who bought a $1,500 TV on Black Friday 2024, swayed by a 50% off sign. Later, he found the same model for $1,200 elsewhere, losing $300 to impulse. Strategy 2. Decode discounts and avoid fake sales. Retailers love sales, but Bach warns many are scams. In 2008, he noted stores inflating original prices to fake discounts, a tactic still rampant. In 2025, Camel shows Amazon's list prices often never existed. Bach's advice: research prices before buying. Use apps like Price Runner or browser extensions to track price histories. For in-store deals, snap a photo of the price tag and check competitors online. If a deal seems too good, it probably is. Consider Lisa, a Bangkok office worker who eyed a $200 blender slashed to $120 during a 2025 Songkran sale. Using a price tracker, she discovered it was $110 on another site year-round. She negotiated with the store, citing the competitor, and got it for $100, saving $20. Meanwhile, her friend Tom fell for a 70% off laptop paying $800 when the real value was $600, costing him $200 extra. Bach's tip: always compare and don't trust limited-time pressure sales cycle every few weeks. Strategy 3. Master credit cards and loyalty programs. Credit cards, Bach says, are a double-edged sword. In 2008, Americans carried $972 billion in credit card debt, with 18% average interest. In 2025, U.S. debt hits $1.1 trillion per the Federal Reserve, and Thai consumers owe 2.1 trillion Thailand bahts, about $60 billion. Retailers push store cards with 10% off today, but their 25 to 30% interest rates dwarf savings if you carry a balance. Bach's rule: use credit cards for convenience, not borrowing, and pay in full monthly. For rewards, choose cashback cards, 1 to 2% on all purchases over store-specific ones. Loyalty programs, another trap, promise savings but encourage overspending. A 2008 study showed loyalty members spent 20% more to earn points, often worth less than 1% of purchases. In 2025, programs like Tesco Club Card or Shopee Coins lock you into one retailer, limiting competition. Bach suggests sticking to one versatile program and redeeming points fast, as they often devalue. Sarah, a Phuket entrepreneur, used a 2% cashback card for all 2024 purchases, earning $300, which she applied to her IRA. Her cousin, glued to a store card, paid $400 in interest, negating her rewards. Strategy 4. Negotiate and walk away. Bach empowers you to haggle, even in 2025's digital age. In 2008, he cited successes negotiating car prices, appliances, and rent. Today, you can bargain on electronics, furniture, and even online via chat. Research the item's wholesale cost, try Alibaba or industry blogs, and offer 10 to 15% above that. If the seller balks, walk away. Bach says this triggers deals 70% of the time. For online purchases, use abandoned cart tactics. Add to cart, leave the site, and wait for discount emails. John, a Pattaya retiree, wanted a $1,000 sofa in 2025. Armed with a competitor's $900 quote, he negotiated the store down to $850, saving $150. His neighbor, unwilling to haggle, paid full price, losing $200. Online, Maria added a $300 phone to her cart, closed the tab, and got a 10% off coupon, saving $30. Bach's mantra: every dollar you save is a dollar you keep. Action steps to shop smart. Bach's Fight for Your Money toolkit offers clear steps. Budget and list. Allocate 10 to 15% of income for discretionary spending. List needs and stick to it. Research prices. Use Price Runner or Camel to verify deals. Check competitors. Use credit wisely. Pay off cards monthly. Choose 1 to 2% cashback over store cards. Negotiate. Research wholesale costs. Offer low and walk away if needed. Pause for wants. Apply the 48-hour rule for non-essentials to curb impulses. Your money, your power. Shopping isn't just spending. It's a chance to flex your financial muscle. Anna's $1,200 travel fund, Lisa's $20 blender win, and John's $150 sofa discount prove you can outsmart retailers. But Mike's $300 TV loss and Tom's $200 laptop regret show the cost of falling for traps. In 2025, with inflation pinching and e-commerce tempting, Bach strategies, plan, research, negotiate, pause, are your shield. Fight for your money, and every purchase becomes a step toward freedom, not a retailer's payday. Part 9. Taxes. Keep more of your money from the taxman. It's 9:32 a.m. on May 19th, 2025, and you're sipping coffee in Bangkok, dreading the tax season. Your hard-earned income, whether from a job, freelance gig, or small business, feels like it's slipping through your fingers to the IRS or Thailand's revenue department. In Fight for Your Money, David Bach calls taxes the ultimate financial battleground, where ignorance and sloppy records can cost you thousands, while savvy planning can save a fortune. Writing in 2008, when Americans overpaid billions due to missed deductions and IRS errors, Bach urged readers to outsmart the tax system legally and keep more of their money. We'll explore his strategies for slashing your tax bill, avoiding audits, and claiming every deduction you deserve, with stories of taxpayers who won big and others who paid the price for mistakes. The tax trap. Bach starts with a sobering fact. Taxes are your biggest expense, often eating 30 to 50% of your income. In 2008, the IRS collected $2.7 trillion, but millions overpaid by missing deductions or failing to plan. Fast forward to 2025, and U.S. tax revenue hits $4.1 trillion per CBO estimates, while Thailand's revenue department collects 2.5 trillion Thailand bahts, about $71 billion. Bach's warning? The tax code is a maze designed to confuse, and without a strategy, you're handing over money you could save. From overlooked credits to penalties for late filings, the system punishes the unprepared. His solution: know the rules, track expenses, and fight for every dollar. Strategy 1. Maximize deductions and credits. Bach's first tip is to claim every deduction and credit you're entitled to. In 2008, Americans left $1 billion in unclaimed credits on the table, like the Earned Income Tax Credit, EITC. In 2025, the EITC can save low to middle income families up to $7,830, while Thailand's personal income tax allowances include 60,000 Thailand bahts for yourself and 30,000 Thailand bahts per child. Bach stresses tracking expenses like home office costs, medical bills, and charitable donations. For freelancers, deducting phone bills, internet, and travel can cut taxes by 20 to 30%. Consider Priya, a 35-year-old graphic designer in Chiang Mai. In 2024, she deducted 200,000 Thailand bahts in expenses, laptop, software, home office, slashing her Thai tax bill from 150,000 Thailand bahts to 90,000 Thailand bahts, saving $1,700. She used Bach's advice to keep receipts in a digital app, making filing a breeze. Contrast this with Jake, a U.S. expat in Bangkok, who missed $3,000 in U.S. deductions, charity, student loan interest, because he tossed receipts, overpaying the IRS. Bach's rule: log every expense weekly, and use software like QuickBooks or Thailand's RD Smart Tax to stay organized. Strategy 2. Plan ahead to lower your taxable income. Bach emphasizes proactive tax planning, not just scrambling at filing time. Contributing to retirement accounts like a 401k or IRA lowers your taxable income. In 2025, U.S. workers can save $23,000 in a 401k, $30,500 if over 50, reducing taxable income dollar for dollar. In Thailand, contributions to a retirement mutual fund, RMF, up to 500,000 Thailand bahts are tax deductible. Bach also suggests timing income, deferring bonuses to January or accelerating deductions like property taxes into December. Take Songchai, a Bangkok IT manager. In 2024, he maxed out his RMF at 200,000 Thailand bahts, cutting his taxable income from 1.2 million Thailand bahts to 1 million Thailand bahts, saving 40,000 Thailand bahts in taxes. He also paid his 2025 condo tax in December 2024, claiming it early. Meanwhile, his colleague, Lisa, didn't plan, missing a 100,000 Thailand bahts RMF deduction and overpaying 20,000 Thailand bahts. Bach's tip: meet a tax advisor in July to adjust withholdings and plan deductions, ensuring no surprises. Strategy 3. Avoid costly mistakes and audits. Bach warns that simple errors, math mistakes, missing forms, or unreported income trigger penalties or audits. In 2008, the IRS audited 1.4 million returns, costing taxpayers $10 billion in fines. In 2025, audits remain a risk, especially for freelancers or those claiming large deductions. Bach's advice: double-check your return, report all income, even crypto or side gigs, and avoid red flags like claiming 100% business use of a car. In Thailand, undeclared income from online sales can lead to 7% VAT penalties plus interest. Maria, a U.S. freelancer, faced a 2024 audit after claiming $10,000 in miscellaneous deductions without receipts. She paid $2,000 in penalties, learning Bach's lesson: keep records for 7 years. In contrast, Tan, a Phuket cafe owner, avoided a Thai audit by using RD Smart Tax to report all 2024 sales, saving 50,000 Thailand bahts in potential fines. Bach suggests hiring a CPA for complex returns, costing $200 to $500, but saving thousands in errors. Strategy 4. Leverage tax-advantaged accounts and opportunities. Bach champions tax-advantaged accounts beyond retirement. Health savings accounts, HSAs, let U.S. taxpayers save $4,300 in 2025, $8,750 for families, tax-free for medical costs. In Thailand, long-term equity funds, LTFs, offer deductions up to 500,000 Thailand bahts if held 7 years. Bach also highlights small business breaks. U.S. sole proprietors can deduct $20,000 for equipment under Section 179, while Thai SMEs get 200% deductions for digital investments. Lila, a U.S. consultant, saved $1,500 in 2024 taxes by funding an HSA and $2,000 by deducting a new laptop. Her friend, Mark, ignored HSAs, paying $1,000 more in taxes. In Thailand, Niren's Bakery claimed a 100,000 Thailand bahts digital POS deduction, saving 20,000 Thailand bahts. Bach's advice: research accounts and incentives yearly as tax laws evolve, e.g., Thailand's 2025 SME digital push. Action steps to fight the taxman. Bach's Fight for Your Money toolkit offers clear steps. Track expenses. Use apps to log receipts. Save records for 7 years. Maximize deductions. Claim EITC, RMF, HSA, or business expenses. Consult a CPA. Plan annually. Meet a tax advisor mid-year to adjust withholdings and deductions. Use tax-advantaged accounts. Fund 401k, IRAs, HSAs, or LTFs to cut taxable income. File accurately. Double-check returns. Report all income to avoid audits. Your money, your victory. Taxes don't have to drain you. Priya's $1,700 savings, Somkai's 40,000 Thailand bahts win, and Tan's audit dodge show how Bach strategies track, plan, maximize, verify, turn the tax code into your ally. But Jake's $3,000 overpayment and Maria's $2,000 penalty highlight the cost of neglect. In 2025, with U.S. and Thai tax systems tightening, every deduction counts. Fight for your money, and you'll keep more to build wealth, travel, or live your dreams. Taxman be damned. Part 10. TV and phone. Stop overpaying for connectivity. It's 9:35 a.m. on May 19, 2025, and you're in Bangkok, flipping through a cable TV guide or scrolling Netflix on your phone, unaware that you might be bleeding hundreds of dollars yearly on bloated bills. In Fight for Your Money, David Bach declares TV and phone services a financial minefield, where cable companies, streaming platforms, and mobile carriers profit by locking you into overpriced plans and hidden fees. Writing in 2008, when cable bundles cost Americans $1,000 annually and cell phone contracts were ironclad, Bach urged readers to slash costs without sacrificing connectivity. In this 30-minute narrative, we'll explore his strategies for outsmarting providers, cutting bills, and choosing services wisely, with stories of savvy savers and those burned by bad deals, all updated for 2025 streaming and 5G era. The TV and phone ripoff. Bach starts with a grim reality. Telecom companies bank on your inertia. In 2008, the average U.S. household spent $1,800 yearly on cable and phone services, often for channels or minutes they didn't use. By 2025, Statista reports U.S. households spend $2,400 annually on TV, cable, streaming, and mobile plans, while Thailand's average is 12,000 Thailand bahts, $340. Hidden fees, installation, equipment rentals, data overages, add hundreds more. Bach's warning? Providers use long-term contracts, promotional pricing that spikes, and upselling to trap you. Without a plan, you're not just connected, you're overpaying. His mission: empower you to negotiate, switch, or cut services to save big. Strategy 1. Audit your bills and cut the fat. Bach's first step is to scrutinize your bills. In 2008, he found 80% of cable subscribers paid for channels they never watched. In 2025, with streaming services like Netflix, $15.49 per month, Disney Plus, $13.99, and HBO Max, $16.99. Many pay $50 to $100 monthly for overlapping content. Mobile plans are worse. Carriers like AIS or True in Thailand charge 1,000 Thailand bahts for unlimited 5G, but you might only need 50 gigabytes. Bach suggests listing all subscriptions, checking usage, data, channels watched, and canceling what you don't need. Use apps like Truebill or Thailand's Money Lover to track recurring charges. Take Nat, a 28-year-old Bangkok marketer. In 2024, she paid 2,500 Thailand bahts monthly for cable, Netflix, and a 100 gigabytes True plan, but watched only Thai dramas and YouTube. Following Bach, she ditched cable, 1,200 Thailand bahts, kept Netflix, for 100 Thailand bahts, and switched to a 30 gigabytes plan, 600 Thailand bahts, saving 1,500 Thailand bahts monthly, $500 yearly for her IRA. Contrast this with Mike, a U.S. expat in Phuket, who ignored his $200 Comcast bundle and $150 AT&T plan, overpaying $1,200 yearly for unwatched sports channels and unused data. Bach's rule: review bills quarterly and cancel anything you haven't used in 30 days. Strategy 2. Negotiate or switch providers. Bach empowers you to haggle with providers, a tactic that worked in 2008 and thrives in 2025's competitive market. Cable companies and carriers fear losing you to rivals or cord cutting. Call and ask for discounts, citing competitor offers. Comcast might drop $30 per month, AIS 200 Thailand bahts. If they refuse, switch. In Thailand, tax 50 gigabytes plan at 700 Thailand bahts undercuts True's 1,000 Thailand bahts. In the US, T-Mobile's $60 unlimited plan beats Verizon's $90. Bach suggests locking in promotional rates, but marking contract end dates to avoid price hikes. Lila, a Chiang Mai teacher, called True in 2024, threatening to switch to DTAC. They slashed her 1,200 Thailand bahts plan to 800 Thailand bahts, saving her 4,800 Thailand bahts yearly. She also bundled Netflix with her plan, cutting $50 annually. Meanwhile, her friend Tom stuck with a $150 US cable plan, missing Spectrum's $90 deal, costing him $720 extra. Bach's tip: call annually, negotiate, and research competitors via sites like cabletv.com or Thailand's MBTC website. Strategy 3. Embrace streaming and prepaid plans. Bach foresaw streaming's rise, noting in 2008 that cable's 200-channel model was inefficient. In 2025, 80% of U.S. households use streaming, per Nielsen, and Thailand's True ID and WeTV dominate. Bach advises replacing cable with targeted subscriptions. Netflix for dramas, YouTube TV, $72.99 for live sports. Share accounts with family to split costs. For phones, prepaid plans like AIS 300 Thailand bahts 15 gigabytes or US's Mint Mobile, $15 per month, beat contracts, offering flexibility without overages. Somchai, a Phuket driver, swapped his 1,500 Thailand bahts cable for True ID, 200 Thailand bahts, and a shared Netflix account, saving 1,200 Thailand bahts monthly. He also switched to AIS prepaid for 100 Thailand bahts, cutting his bill by 600 Thailand bahts, totaling $500 yearly saved. Conversely, Sarah, a U.S. retiree, kept her $180 cable and $100 Verizon plan, wasting $1,200 yearly on unwatched channels and data. Bach's advice: test streaming for a month and try prepaid for phones to avoid contracts. Strategy 4. Dodge fees and fine print. Hidden fees: $10 router rentals, $20 activation, 100 Thailand bahts SMS charges, are Bach's pet peeve. In 2008, cable equipment fees cost $200 yearly. In 2025, they're $300, per Consumer Reports. Mobile data overages add $15 per gigabyte in the US, 50 Thailand bahts per gigabyte in Thailand. Bach says to buy your own modem. $100 saves $120 per year, and read contracts for early termination fees, $200 to $500. Check bills for administrative charges and dispute them. Report issues to Thailand's NBTC or US's FCC. Maria, a Bangkok freelancer, bought a 3,000 Thailand bahts router, saving 2,400 Thailand bahts yearly on cruise rental. She disputed a 500 Thailand bahts service fee, getting it waived. Her cousin, ignoring a $20 Comcast fee, lost $240 yearly. Bach's rule: own equipment and call to dispute any fee not in your contract. Action steps to save on TV and phone. Bach's Fight for Your Money Toolkit offers clear steps. Audit bills, list subscriptions, cancel and use services using Truebill or Money Lover. Negotiate, call providers yearly, cite competitors, and lock in promotions. Go streaming/prepaid. Replace cable with Netflix/TrueID. Use prepaid plans like AIS or Mint Mobile. Avoid fees. Buy modems, read contracts, and dispute charges with NBTC/FCC. Track usage. Monitor data via carrier apps. Limit streaming to 2 to 3 platforms. Your connectivity, your savings. TV and phone services shouldn't drain your wallet. Nat's $500 savings. Lila's 4,800 Thailand bahts win, and Somkai's $500 cut show Bach strategies. Audit, negotiate, streamline, scrutinize, work. But Mike's $1,200 loss and Sarah's $1,200 waste prove the cost of inaction. In 2025, with streaming wars and 5G hype, providers are hungrier for your money. Fight for every baht or dollar, and you'll stay connected while building wealth for your dreams. Part 11: Travel. Vacation smart without breaking the bank. It's 9:39 a.m. on May 19th, 2025, and you're daydreaming in Bangkok, picturing a beach getaway to Phuket or a cultural dive in Tokyo. But travel costs, flights, hotels, tours, can turn dreams into financial nightmares. In Fight for Your Money, David Bach calls travel a prime ripoff zone, where airlines, hotels, and booking sites profit by inflating prices and hiding fees. Writing in 2008, when Americans spent $800 billion on travel despite a recession, Bach urged readers to plan strategically to vacation affordably. In this 30-minute narrative, we'll explore his strategies for scoring deals, dodging scams, and stretching your travel budget, with stories of savvy explorers and those stung by costly mistakes, all tailored for 2025's dynamic travel landscape. The Travel Trap. Bach begins with a stark truth: travel is expensive, and providers know you'll pay for memories. In 2008, the average U.S. family spent $4,000 on vacations, often hit with $500 in hidden fees, baggage, resort charges, currency exchange. By 2025, Statista reports global travel spending at $1.2 trillion, with Thailand's tourism revenue at 3 trillion Thailand bahts, $85 billion. Bach's warning: airlines, hotels, and booking platforms use dynamic pricing, fake scarcity, and fine print to squeeze you. Without a plan, you're not traveling, you're overpaying. His mission: empower you to book smart, save thousands, and enjoy guilt-free getaways. Strategy 1. Plan early and be flexible. Bach's first rule is to book early and stay flexible. In 2008, he noted that flights booked 6 to 8 weeks out save 20 to 30%. In 2025, Skyscanner data shows booking 12 weeks ahead for international flights, e.g., Bangkok to Tokyo, saves 25% or $150 on a $600 ticket. Flexibility: traveling midweek or in shoulder seasons, April, October, cuts costs further. Hotels drop 15 to 20% outside peak periods. Bach suggests setting price alerts on Kayak or Agoda to snag deals when fares dip. Take Am, a 32-year-old Bangkok nurse. In 2024, she booked a Phuket trip 10 weeks early for April, securing a 5,000 Thailand bahts round-trip flight and hotel package, saving 2,000 Thailand bahts versus peak season prices. She used Agoda alerts to catch a 10% hotel discount, adding $50 for her spa day. Contrast this with John, a U.S. expat, who booked a last-minute Bali trip in December 2024, paying $800 for a flight Am got for $400, losing $400 to poor timing. Bach's tip: plan 3 to 6 months ahead, and travel Tuesday through Wednesday for lowest fares. Strategy 2. Compare and negotiate deals. Bach urges comparing prices across platforms, as booking sites vary by 10 to 20%. In 2008, he recommended checking Expedia and Orbitz, In 2025, add Traveloka and Trip.com for Southeast Asia. Direct airline or hotel sites often beat third-party rates. Thai Airways website shaved 1,000 Thailand bahts off a 2024 flight versus Agoda. Bach also advocates negotiating, especially with hotels. Call and ask for discounts, citing loyalty or competitor offers. Small hotels in Thailand often cut 10 to 15%. Lila, a Chiang Mai freelancer, saved 3,000 Thailand bahts on a 2024 Hanoi hotel by booking direct and negotiating a 15% discount, citing Booking.com's rate. She cross-checked flights on Skyscanner, grabbing a $100 Vietjet deal. Her friend Mike, however, booked a $300 Phuket resort via Expedia without comparing, missing a $200 direct rate, costing $100 extra. Bach's advice: spend 30 minutes comparing and call hotels to haggle. Email screenshots of better deals if needed. Strategy 3. Avoid hidden fees and scams. Hidden fees: $50 baggage, $20 seat selection, 1,000 Thailand bahts resort charges, are Bach's pet peeve. In 2008, airlines earned $2 billion on fees. In 2025, it's $90 billion globally, per IATA. Bach suggests choosing airlines like Southwest, Free Bags, or Thai Smile, included fees. For hotels, read fine print for destination or cleaning fees and dispute them at check-in. He also warns of scams, fake booking sites, or free vacation clubs. Verify sites via BBB or Thailand's DBD. Never pay up front for exclusive deals. Somchai, a Phuket diver, picked a 2024 Krabi resort with transparent pricing, avoiding a 2,000 Thailand bahts resort fee his friend paid. He used a verified site, saving $100 versus a shady deal. Conversely, Sarah, a U.S. tourist, fell for a free timeshare seminar in 2024, paying $1,000 in hidden fees, losing $800 after refunds. Bach's rule: pack light to dodge baggage fees, and Google site name plus scam before booking. Strategy 4. Leverage rewards and budget travel. Bach champions loyalty programs and budget travel hacks. In 2008, he noted frequent flyer miles saved 10% on flights. In 2025, programs like Thai Airways Royal Orchid or Marriott Bonvoy offer free nights or upgrades. Redeem points for high-value rewards, flights over gift cards. For budget travel, Bach suggests hostels, Airbnb, or package deals. In Thailand, 1,500 Thailand bahts per night guest houses beat $150 hotels. Cooking one meal daily saves $10 to $20 per person. Niren, a Bangkok student, used 2024 Thai Airways points for a free $200 Chiang Rai flight and stayed at a 800 Thailand bahts Airbnb, saving 2,000 Thailand bahts versus a hotel. He cooked breakfast, cutting $50. His cousin, ignoring rewards, paid $300 for the same flight and $150 per night hotel, wasting $250. Bach's tip: join one airline and hotel program and try budget options like GrabFood or local markets for meals. Action steps to travel smart. Bach's Fight for Your Money toolkit offers clear steps. Plan early. Book flights 12 weeks out. Travel midweek or shoulder seasons. Compare prices. Check Skyscanner, Traveloka, and direct sites. Negotiate hotel rates. Dodge fees. Pick low-fee airlines. Verify sites via DBD/BBB. Read fine print. Use rewards. Join loyalty programs. Redeem points for flights or rooms. Budget hacks. Try Airbnb, guest houses, or cooking to cut costs. Your vacation, your victory. Travel shouldn't drain your savings. AM's 2,000 Thailand bahts Phuket deal, Lila's 3,000 Thailand bahts Hanoi win, and Niren's $200 free flight show Bach strategies. Plan, compare, scrutinize, leverage, deliver. But John's $400 Bali loss and Sarah's $800 scam prove the stakes of carelessness. In 2025, with travel booming and scams evolving, every baht or dollar counts. Fight for your money, and your next vacation will be a memory, not a regret. Conclusion: your financial battle plan. As we wrap up this summary, let's reflect on David Bach's core message. You don't need to be rich to live rich. By fighting for your money, you can save thousands annually. Money that funds your dreams, not corporate profits. Bach's Fight for Your Money is more than a personal finance book. It's a call to action to become a savvy consumer in a world designed to exploit your ignorance. Whether it's negotiating a lower cable bill, boosting your credit score, or avoiding a bad car lease, Bach's toolkit empowers you to take control. The book's impact is evident in its real-life stories. Readers who saved $1,320 on phone and cable bills, $1,200 on insurance, or $27,000 on a car purchase. These aren't just numbers. They're proof that small actions can transform your financial future. In 2025, as costs rise and financial systems grow more complex, Bach's advice remains a beacon. Be informed, be persistent, and never stop fighting for your money. So, pick up your financial sword, whether it's a phone call, a letter, or a smarter purchase decision, and start winning the war for your wallet. As Bach says, when you fight for your money, you keep more of your hard-earned paycheck and spend your life doing what you really want to do. Let this book be your guide to financial freedom, $1 at a time.